Hey there everyone, Matthew with Forex-Nation.com. I haven't put a video up in a little bit. I haven't done anything with regards to my trades because I'm lazy. But I'll be honest with you, this has been a really good week. I couldn't sit here any longer without doing something to kind of describe and show others how easy it is to trade Forex once you develop your own system and get your own indicators that you're comfortable with and you know how to use and you know how to read. This week has been, no doubt about it, hands down, a downtrending week. Obviously, this is the hour chart. This is my simplified chart. I use this one for some indicators that I don't put on this one. That's just a kind of idea you might want to try if you're focusing on one currency pair. Have you two different charts that one's a little bit more simplistic so that you're not getting too much of a cluttered image when you're looking at perhaps the one that has all your support and resistance lines, moving averages and daily and weekly pivots on it. Maybe you have another one that just has, for example here, the moving averages and the daily pivots. Another thing I use this chart for is Fibonacci. Let's just jump into that. The Fibonacci's worked really great this week. Why? Because it's a trending market. Fibonacci does not work on a ranging market. Don't waste your time. It works on a trending market, meaning a market that's predominantly and predictably moving in a certain direction, in this case down. Let's see here. Well, whenever you see the market do something like that, you know it's trending. It's not ranging. It's moving down here. First off, to start the week, you see this gap. This is the close of New York here, and this is the open over in Australia when the market actually opens, and you can see big gap here in between prices. That's my first trade. I mean, that closes the gap. That's something that price action tends to do, is when there's a gap like that over the weekend, it closes. And then obviously we dropped down really sharply, so that gave you your first indication of how sharp momentum is going to be for the week. Kind of set the tone. And you know, you could have used Fibonacci here. I don't remember exactly how I drew it. Fibonacci is something that you can adapt. You know, some people draw their lines completely different places. I try to find lines that fit, so that fit the price action. What I mean by that is you can double click up here. Excuse me, I'm talking way too fast. You can double click up here. You can move your Fibonacci around to get it to work out right. I think I actually had the bottom down here and I had the top, I want to say in the ballpark of this first wave somewhere. Well, anyway, you can just see by just this rough example here where I pick a previous swing high, the most recent previous swing high, which it shows here. And I go over all this on the website in terms of how to do Fibonacci. It's really simple. But here's a previous swing high and a previous swing low. And I'm looking for this thing to continue down, but I expect it to retrace. So what ends up happening is it retraces right here to the pip, to the 38.2. Tries it again and couldn't reach the same level. That's where I went ahead and decided to enter when this thing was really flat. That gave me an indication that upward momentum was almost non-existent, and it had already reached the 38.2 level, which is a popular level. So you can see that was a good indication of where resistance would be. Another level, if it broke through here, would have been the 50 or the 61.8. Those are really popular levels to look for resistance and price action, but you can see the 38.2 was sufficient, and you had price action drop down. Now let's look here at this next move, where price action will drop down, and then what it does is it consolidates. That means it'll move sideways. You've got profit taking, and you've got people that are basically unwinding some of their positions, and the market starts to move sideways like it does here. When that happens, go ahead and zoom out and make you another fib line. And so we'll go with the more recent swing high, which perhaps it was there. Here's the most recent swing low. And what do you know? Sorry, let me fix that. Looks pretty good. If we zoom in here, looks pretty good in terms of, once again, 61.8, another popular level of resistance. Works out once again. Price action comes up to it, can't break it. Tries it again, can't break it. Good sign to enter a down or excuse me, to enter a sell because it's looking like price action is wanting to go back down. Sometimes you don't have it even tested twice like it's been doing here. Sometimes it's just once. It's kind of a personal choice as to when you get in on this thing. I would certainly, some traders get in right at the 38.2, and if it goes up and it doesn't work out, they get out and they get in at the 50. Goes up, doesn't work out, they get out and get in at the 61.8. I prefer to see it bounce off of one of those first. So I would have gotten in initially right here, but you also could have waited to see if it can go through one more time. And if that happens, second time is pretty strong indication that it's probably just going to go on down. So there you go, and it does. It's the 61.8. That means it should drop down to the 161.8. We can see it obviously did that. Consolidate a little bit, continue to drop down because obviously it's in sell-off at this moment. So there's two examples of Fibonacci. There's more. I don't want to bore you. Go over to the website to check out how to do it for your own charts. I guess another thing I could show would be, even if you don't like Fibonacci, support resistance. That's something that you have to know how to use. And look, it works great. The market starts to range right here. You can see you have clear line of support and a clear line of resistance. Okay, that's pretty clear. It's a tight range. So you're looking for a breakout, either to the upside, so going up here. If I see this breakout go up, that's a good indication that the price action has exhausted the sell-off and that it's going to rally a little bit. If it breaks down, indication that it's going to go down, and that's what happens here. And look what happens also. You see that price action goes down, and then where we had our line, I'll just put one on here, where we had our line, price action, anytime it comes back to that line and is unable to break above it, close, or continue to move above it, but instead drops back down, this is where you want to enter. I'm a cautious trader. When I see a breakout like this happen, if I can get in pretty close to where the breakout happened, I will. So in this case, I would have gotten in really close. I don't remember if this was a specific trade or not, but I would have gotten in on the initial breakout because it's close to the line. But sometimes you see these huge candlesticks like this one right here, where if say this was a breakout, which it wasn't, it was just a continuation, but if this was a breakout, I probably would have held off and waited for something like this to happen. See this retracement back up to the line? When that happens and the line holds again, now what was once support here, here, and here is now becoming resistance. That is classic technical analysis and a classic indication you can get in this trade. This is a safe trade, and as you can see, it paid off really well. So few trade setups there. Our moving averages are working great in terms of the predicting when the downtrend is going to happen. When we have a crossover up, it's going up. When we have a crossover down, it's going down, and it has not crossed back over up. So technically, if you're a longer term trader, you could have stayed in and gained over 400 pips at this point, which it's kind of frustrating to know I could have put one trade in and made 400 pips, but you don't know that that's going to happen ever, obviously, in advance. This is a real-time market. So yeah, I hope this helped. Feel free to leave comments, go to the website, ask questions. I'm here to teach, not to sell. So let me know what you think, and good luck to you.